I rise today to push back against one of the Securities and Exchange Commission's, or SEC's, many reckless and irresponsible rules. My amendment simply prohibits funding for the costly and unnecessary private fund advisor rule. I oppose this rule because the overwhelmingly majority of private and equity investments, which this rule would affect, go to small businesses. This rule would have a detrimental impact on the many small businesses across America and in my home state of West Virginia. Private funds are essentially pools of money collected from multiple investors that the advisor then invests primarily in small and medium-sized businesses. This SEC rule will reduce the ability of private fund advisors to continue supporting small businesses in West Virginia and America by placing burdensome compliance costs on these funds, such as new quarterly statements and annual audits. Furthermore, the SEC has been unable to articulate how this rule will increase funding for small businesses. Private fund advisors who manage these funds are already well regulated and legally required to act in the best interest of the investors. Unlike the public stock market, it is wealthy individuals and sophisticated institutions like pension funds and university endowments that invest in these private funds. This is nothing more than regulating for the sake of regulating. When the SEC proposed this rule, my colleagues on both sides of the aisle expressed concerns about the negative impacts this rule would have on small businesses. Just last year, Congress asked the SEC to conduct a full economic analysis of this rule, which the Commission failed to do. Many of my colleagues also wrote to the SEC expressing concerns about the negative effects and impact of this rule on the access to funds for small companies. However, SEC has not addressed these concerns and has not adequately responded to the letters sent by many members, including Chairman Womack. Given high interest rates and the new capital rules that will further restrict bank lending to companies, now is not the time to restrict the ability of private funds to invest in West Virginia's thousands of small businesses. According to the American Investment Council, 85% of equity-backed companies are small businesses, and 89% of public pensions invest in private equity funds. This rule would only unnecessarily restrict the efficient operation of private funds, and it will crowd out smaller and emerging funds and increase the cost to investors. SEC Commissioner Hester Peirce put it best when she said that this rulemaking is, quote, ahistorical, unjustified, unlawful, impractical, confusing, and harmful, close quotes. Unlike Gary Gensler, instead of making the public markets more attractive, the SEC has focused on making the private markets less attractive. My amendment will refocus the SEC on its core mission of protecting retail investors while promoting capital formation and efficient markets. The private fund advisor rule needlessly imposes a one-size-fits-all approach and restrictions on sophisticated institutional investors. I urge my colleagues to support this amendment and support funding for the small businesses in their district. I reserve the balance of my time.